Even before the AI boom, memory was around 25% of the global semiconductor market. Micron has invested nearly $10 billion into a new HBM plant in Japan. Enormous amounts of global AI spending, which is estimated about $1.5 trillion in 2025. What is happening in the memory storage market? A few months back, semiconductor chips were the real bottleneck. But now, in the age of AI, what the real bottlenecks is about memory. These acronyms known as DRAM, NAND, and HBM, all of these are acronyms for different types of memory storage. And all of these have become very important for computing power over the last year or two. And this is one of the biggest changes that has happened since the internet potentially. In the 1980s, there used to be more than 20 companies that used to make DRAM, one of the earlier generations of memory storage. Today, only 3 firms are available: Samsung, SK Hynix, and Micron, that dominate this market after repeated waves of bankruptcies and consolidation has impacted the memory market, as you can see in the graph below. And the reason for this consolidation is fundamentally because memory has become a commodity now. When the times are good, everyone is adding capacity. When demand slows down, prices are sort of falling down, the weaker players were wiped out. So today we'll look at what is happening in the memory storage market and how this is potentially a super cycle that is actually forming, and what could happen in the next 1 or 2 years as capacity potentially gets added on. So let's get into it. Even before the AI boom, memory was around 25% of the global semiconductor market in terms of revenue as of 2020. The DRAM market is estimated to be about $121 billion in 2025, and is expected to grow to roughly $200 billion by 2032, with Asia Pacific holding roughly around 45% of this market. When you add in other more advanced forms of memory such as NAND, the combined market grows to $170 billion as of 2024, and the overall market is expected to go to nearly $280 billion by 2033. And this AI wave has turned this inherently very cyclical industry into something that's becoming closer to a super cycle. Training large language models, running these large language models requires extraordinary amounts of power and memory. AI servers can carry several times the number of DRAM, HBM, NAND components compared to traditional cloud servers. At the same time, you have PCs, smartphones, laptops, but the demand has recovered from its post-pandemic slump. So what we are seeing is that the capacity that was originally planned for general usage of DRAM and NAND and even HBM, all of that is now not just being diverted towards the more profitable HBM side, but there is a structural shortage because of all of this extra demand that's come up. So what exactly is happening on this global supply chain crunch? Well, over the last 1 year, global markets have moved from a zone of having surplus components from a memory perspective to basically outright shortage right now. One example of this supply crunch is when you look at Micron. It has just recently this week shut down its 29-year-old business, consumer-focused business, and is now shifting its focus fully on building these memory products for AI companies. Industry data is already showing us that DRAM prices have risen roughly 50% in 2025 already, with forecasts of another 30% rise in the last quarter of this financial year, along with potentially an early 2026 seeing around 20% further increase in prices. And inventory levels over the last 1 year have substantially decreased for DRAM as well. So what we're seeing is a genuine supply chain crisis, a supply chain shock. AI data centers, cloud giants, these large LLM models that are being deployed are essentially placing multitude of orders for DRAM, HBM, and these are very open-ended orders. While smartphone makers, PCs are being told to accept the more rationed allocations at the higher prices. In some product categories, what we're seeing is memory prices have also doubled. Suppliers are warning that the significant new capacity cannot be expected till about 2027 or 2028. for that matter. So we spoke about three types of memory storage: NAND, DRAM, and HBM. These are all acronyms for something that's quite complex, so we'll not get into that right now. But what we need to understand is HBM is the more advanced model in terms of advanced memory storage mechanism available. It uses typically higher bandwidth, lower latency compared to DRAMs, and that is exactly what AI training and the workloads demand as of now. But all of this performance also comes at a cost. HBMs are more difficult, they're more complex to manufacture, fabricate, and package, and require cutting-edge technology. As we spoke earlier with DRAM, there are only 3 companies that are currently controlling the entire bulk of HBM production as well. Building this new HBM capacity is not like adding any other assembly plant or a new manufacturing unit. It takes years, it takes huge amount of capex in the multiples of billions of dollars, and there's also has to be stable access to sufficiently advanced technology, materials, packaging tools, all of which are in short supply across the chain. Memory makers have very strong incentive to prioritize pricing discipline over aggressive capacity additions, given the sort of monopoly that they have as of now. So there is this, from a semiconductor perspective, we spoke about way back how there was some geopolitical impact of power as well at play. The similar aspect is being played out here in the memory space as well. Currently the market is cornered by 4 major countries: South Korea, US, Japan, and Taiwan. China is coming up with its own manufacturing plants, with its own memory companies, and has poured billions into this. However, it has struggled to capitalize on the current shortage. Their companies are reported to be about 3 years behind South Korean competitors. Its chips lag in efficiency. There is also a looming US export restriction, which will ultimately slow down further progress for Chinese companies. This also means that China remains heavily dependent on foreign memory for its own AI ambitions, and there is obviously strategic vulnerability as tech sanctions could rise amid further trade tariffs with Donald Trump and China. So whoever controls memory capacity to a degree could also control a very strong lever towards leading in the AI race that we are seeing many of these large countries dominate. Japan has emerged as a key beneficiary of some of these sort of investments that are happening. Micron has invested nearly $10 billion into a new HBM plant in Japan, with the Japanese government also providing substantial capex subsidies for that. US is deploying CHIPS Acts, which also subsidizes to keep advanced memory capacity onshore while tightening export restrictions to limit China's access to this cutting edge technology in memory and manufacturing tools that are available in the US. China is naturally responding back with its own push and sort of subsidies for its own companies, but there is this technological gap that's available, which is very difficult to catch up on as of now. And when you speak about India, we are substantially further back compared to China as well, given very limited investments have happened in this space as of now. So the obvious question is whether AI demand can finally actually kill the industry's famous boom and bust pattern that has happened historically for the memory industry. On the one side, the demand side, what we're seeing is a very strong story right now. There's enormous amounts of global AI spending, which is estimated about $1.5 trillion in 2025 and could cross $2 trillion as soon as 2026 as well. We're at a stage where AI has become potentially too big to fail, given the amount of capital that has been committed here. And that kind of spending ultimately cannot be possible without a proportional increase or rise in the memory capacity stage as well. And on the other side, what we're seeing are these current, supply chain shocks, sky high prices, which are triggering huge capex plans from these major companies as well. So if all of these projects that these companies are planning come online roughly around 2027, 2028, just as AI hardware maybe from a growth perspective normalizes, so the industry could again go back to its old cycle of boom and bust, where we might see oversupply because of excess capacity in the market. So that's something we need to think about. For now, the base case is that this super cycle could last multiple years, but just because there are these high memory margins or prices, that doesn't mean that they will necessarily continue to exist in the future as well. So for India, the AI memory crunch is both a threat and an opportunity. On the threat side, we are seeing that India is necessarily a net importer of semiconductors, including advanced memory, which means these higher prices that we're seeing in memory will flow down into the cost of everything that use these items, so such as smartphones, laptops, electronics, which is one of the fastest growing import categories in India, and where the government is also looking to reduce dependence on overseas suppliers. On the opportunity side, what we're seeing is that India is getting some sort of foothold in this value chain. Micron is assembling a project in Gujarat, which is one of the larger global memory investments that has happened on the Indian soil. They're planning to invest roughly $825 million across multiple phases, and with the government also providing certain subsidies, the total investment actually goes up to nearly $2.75 billion for the project. The Micron project is important because if India can do well in it, in terms of execution, in terms of credibility, in terms of reliability, and the overall policy that's available there, it makes the overall credibility for India more attractive. And eventually, we could move to more front-end manufacturing over the next decade. The timing currently is also favorable. Many large players want to diversify away from China, all of their supply chains, and India, if it's a potential offering and can offer aggressive subsidies, could potentially capture this and build a large domestic market as well. So who can gain? Well, Indian IT services and R&D firms that design chips, boards, are interlocked with the AI infrastructure for global clients. All of these stand to gain as semiconductor and cloud companies start ramping up spending on this side. Domestic electronic manufacturing systems, electronics manufacturers, all of those are stand to benefit, as well as device makers localize more of their production to arbitrage this rise in sort of material cost that's happening, and to potentially qualify for India's PLI scheme as well. Third, data centers and data center operators could indirectly also ride the wave of AI infrastructure build-outs that are happening. They may face some headwind because of higher equipment costs, but that could potentially just pass down to the customer as well. So ultimately, this AI memory crunch that we're seeing is a reminder that every major technological revolution that's happened tends to redistribute bottlenecks, and we're in a bottleneck for a very core component for the growth and scaling of many of these AI companies right now, which is the memory systems. We hope you enjoyed today's video. If you did, do like, share, and subscribe. Let us know in the comments what else you would want us to cover next. Happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.